What is going on, guys? Johnny Godfrey here. Hope everyone's having a fantastic week. Happy Fun Coupon Friday. Hope you're all banking some profit. And more importantly, I hope you all are closing out a great September. My September has been awesome. It's been the first time in a while it's felt like it's just been slow, steady growth, but it's been a really big month. So I've banked and locked in 11.23% profit. And I've got 6% running on this monster trade here, which I'm going to talk to you guys about. So some pretty awesome results. My second double-digit month in a row. So August was 10% after a very slow July. July was just under 2% return. So yeah, it's good to be putting some big boy figures back on the scoreboard. I want to talk to you guys today about EuroCAD because this is what we call in Masterclass a holy grail setup. And what that means is all time frames have aligned. They all have a bearish bias from the quarterly to the monthly to the weekly to the daily and then the intradays as well. That's why I'm looking to hold this position open for the foreseeable. And as you guys can probably see where my mouse is hovering, I'm targeting a 13% return, which is going to be an absolutely epic trade when it does play out. Let's have a look at the higher time frames to start off. We can see if we jump into this monthly chart, it's even more obvious. On the quarterly, we're obviously about to end Q3 and begin Q4, so this quarterly candle is very close to closing now. What we have is this pattern that was forming. Price has been rejecting these lows the whole time since 2012, so 7 years we've been failing to break beneath this dynamic support. We've now had that break in Q3, from July to September, we're now getting that super strong break. Look how powerful and strong that break to the downside is with this bearish engulfing, breaking through the EMA, breaking this level. Absolutely zero regard for this dynamic support. So this is looking great, and I very much expect there to be, after we have this such a strong breakout, closing this quarter off, I expect there to continue some bearish momentum. We may get a little pullback before we see that continuation of bearish momentum, but I do expect it to continue. If we have a look at the monthly chart, very, very, very similar story. Again, this dynamic support is more relevant to it because I had it drawn in on the monthly. On the quarterly, it could have been adjusted to make it a little bit cleaner. But again, we can see this strong breakdown of this pattern. We had the breakdown in July, closing beneath the monthly 50 EMA, beneath this dynamic support, and then we had a quick retest in August, which you can see much more obviously on the weekly chart, which we'll obviously get to. Price pulled back, gave us a rejection, and then continued to the downside, exactly what we wanted to see. So overall, quarterly, monthly, extremely bearish. When we have a look at the weekly chart, we can see again we've got that dynamic support beneath that was holding price beautifully. We broke that down at the beginning of July. We also had this really nice level of support, this support zone here at around 1.49. And we can see we hadn't been below that. We hadn't managed to close underneath that since November 2017. For 2 years, we've been bouncing off of this level of support, failing to allow the bears to take control and close underneath until July. So what we saw on the weekly was this strong breakdown of all the support levels. We then got the pullback to now test this support as resistance. It's very important. It's something which we're always looking for. We're looking for the break, we're looking for the pullback, the retest, and then we can go and continue with that trend in whatever direction the bias is forming. So that's exactly what we got. We got the breakdown, we got the pullback, the retest of all of those confluence factors before price just beautifully started its next leg down. If we have a look at the daily chart, we can see that as well. I like to keep my charts very clean, so I remove support levels, etc., as they become not relevant to where price action is now. But we can see we had that breakdown. We then got the pullback, so we're forming a nice lower low. We're trending to the downside. We formed a nice lower low. We pulled back, formed a lower high. So what do we expect to see? A new lower low, the fresh leg down, which is exactly what we got. Elliott Waves theory. So we got that new fresh leg down. We then got another pullback to form a lower low, which is where I got into this position. So we had this really nice level of support which got broken. We can see all these previous rejections as support, as resistance. So it aligned pretty beautifully. It aligned with 0.382 fib retracement, the daily 50 EMA, which is pretty well respected if you have a look here. And we started to decelerate. We started to decelerate on this daily chart, and we had two high test candles forming, showing us the rejections, showing us that the bulls are failing to push this any higher, and the bears still very much have control of this. We are going to see more downside. So this is where I jumped in on the 23rd of September, which was Monday this week. So I'm recording this on Friday. This was Monday. At this point, this is where I jumped in, and let's quickly jump in and have a look at my entry, my stop loss, etc. So this was what we call in masterclass at CBO. It's what we teach as a CBO strategy. I'm not going to dive too deep into that because, again, if you want to be learning our styles, you need to be learning directly from us. You need to be in webinars. You need to see all of our trade videos. Otherwise, it's going to take you a long time to figure out exactly what kind of style we're trading here. So what we saw on that 4 hour was that strong daily bearish move, followed by the pullback. We started forming this little triangle pattern, got a rejection of the top, got a triple top, and then price started breaking down nicely. We formed a lower low, this little head and shoulders pattern. We then broke it down, broke down this level of support that was in place. We can see where these price was previously decelerating. We broke down that, we broke down the 4 hour 50 EMA, and then it's all starting to align perfectly. So same with the 1 hour, same with the story on the 1 hour. We had that beautiful level of support to now act as resistance. We had the 1 hour 50 EMA, which was broken down. We had 0.382 fib retracement. We had the neckline of the head and shoulders pattern. It's all aligning perfectly. So at this point, it was an absolute no-brainer to get in when I saw price pull back to all of my confluence areas, decelerate, and as soon as that bearish momentum came in, you can move it across because the entry was there. I don't know why TradingViews moved that. As soon as that momentum came in, at that point, that's when I took this entry short. When I'm seeing that bearish momentum. So my stops were above 0.618 fib retracement. This is what we teach, this is what we do, so I'm not going to go into that. If you want to learn and understand the thesis behind that, join masterclass. All the content covers this: entries, stops, profit targets. In terms of profit target, this is where it becomes interesting. So this hit my profit target one on the 26th. So yesterday, this hit my profit target one. So we can see here on this daily chart, we've got a pretty nice level of support, which has got some nice bounces off, which is exactly where price stalled at before. We've got it on the daily, and it's pretty obvious on that weekly chart as well. We can see some nice rejections off of this level. So that's where my soft target would be. That's where my target one is. That's where I'm paying attention. So why am I looking to stretch this instead of banking that 6% profit now? Because we can obviously see prices decelerating, right? The run is running out of steam. This needs to pull back to where there's going to be some liquidity in the markets, new orders, fresh orders, for the bears to get enough momentum to continue it down, to break through that support level and push it on that next leg down. So why am I happy to play that pullback? Why am I happy to allow price to pull back, letting my profit go down in order to look for that bigger move? And the reasons why is this is what we call a holy grail. They very rarely come up, and it's because all of the time frames from that quarterly align with a bearish bias. Everything is trending to the downside. All time frames are trending to the downside. So why wouldn't I want to hold? Because there is no negative confluence other than that level of support, which is in the way from me and banking the move. So there, if we measure it out, we've got the next level of daily support and resistance, and where I would look to be targeting this down to is around this level here, which also pretty much beautifully aligns with 0.27 fib extension, which is something else which we look at. So we can see some nice rejections as support, as resistance. So this would be where I'm looking for the next daily leg to go. So you have to think about it. This is a trend on the daily. It's going to be a run on the weekly. So that is why I'm happy to allow this to pull back, to manage it in a way that allowing some of my profit to go down, because I have so much confidence and so much confidence behind holding this trade to make sure that I'm banking that 13%, to give myself the biggest opportunity to banking that 13%. That's why I want to give it as much room as possible without being stupid, in order to push to my main secondary target. And that's where I'll look to take my profit. Do I expect to see a pullback? Yes. So how am I going to manage this? So when I have something this strong, I am not worried about it pulling back to that 4-hour 50 EMA. If it pulls back to 4-hour 50 EMA, we think about how market structure works. It's not uncommon. It's very common when we have lows like this for price, when we get a strong breakdown, to pull back and retest. This is where people are going to have their orders, and it aligns with that 4-hour 50 EMA, which is why we look at it. So I'm expecting there at some point price will either just continue to the downside when markets open up next week. As I said, I don't expect a lot of volume volatility kicking in at 4 o'clock on a Friday. Everyone's taking their profit, everyone's getting out for the weekend. But I'm leaving this open, and I wouldn't be surprised if next week we saw either just a collapse to the downside, and then I can be much more aggressive with my management, much more aggressive with my stop, because I will have that daily previous support as now resistance to act as where I can move my stop, where I can protect my stop to bank more profit. But for now, this could easily just pull back to that 4-hour 50 EMA, to these recent lows on the 4-hour chart, and that's why I won't choke my stop. I want to give this as much room as possible to play out. So I only have about 1% locked in on this, because I do expect this to pull back. I want to allow it to give it that room to pull back, because you have to think about it. When we have a move as large as this has been, the markets have to breathe, fresh orders have to come, people are going to take their profit, and it's going to push price back up. It doesn't mean the bulls have control. So I want to allow myself to give myself as much opportunity as possible, because these trades like this, where everything aligns. Trades like this, the holy grail setups, don't occur often. I see maybe 4 or 5 a year, 1 or 2 a quarter, absolute max. So when they do arise, I want to make sure that I'm benefiting from it, because 13% is huge. Like, what am I up this month, not including this? I'm up 11.23%, which is massive. People underestimate the power of even 4%. 4% on a big account when you're compounding a month. You can have huge returns. You can have huge returns. If your account's big enough, that 4% can be more than people earn in a year. So the power of a large account and these percentage figures and allowing them to compound, it's so powerful. It's so powerful. So that kind of wraps up EuroCAD, my explanation behind the entry, how I've managed it, how I'm looking to manage it, what I'm expecting to happen, why I'm confident in not choking this trade, in managing it the way I am. And that confidence comes with experience. That confidence comes with backtesting, with hours and days and fucking years of putting work into mastering this skill, into making it look easy. That's what I've spent so many relentless days, months, weeks, years doing. So that wraps up EuroCAD. We have a very special launch going on. So Arek's been working like a madman behind the scenes, and we're launching V2.0 of Masterclass. It's going to be like nothing. Well, I think the version 1 was just so much higher level, so much more professional. Everything about it is just something that the trading world hasn't seen. It was just so different, and Arek's gone back and he's doing version 2, and it's going to be out of this world. The reason why we're also going to be set apart is because we're now covering equities, we're now covering crypto, and we're now also obviously FX. There's going to be a psychology side to it, which is something which is what holds most people back, is psychology. So there's going to be a psychology side to it. There's going to be an investing side to it. How to build how to invest and build a portfolio for yourselves outside of trading. So with your profit, you build this on the side, so you're always having that steady progress in the background as well as your epic trading results. So there's a lot of content to be had. It's going to be epic. It launches mid-October, and what we're doing at the moment is doing pre-orders, and we're kind of staging it. So if you get in before the end of this month, you're going to get the best price. If you get in the week after that, you're going to get the second best price. If you get in on the third week, you're going to get a good price, but it's not going to be as good as what you get now. So if you are interested in learning how to trade like this, if you do want to learn how to be more confident with your trading, in terms of holding trades, managing trades, taking trades, whatever it is, check us out. Have a look at the pre-orders, see if it interests you. Any questions, shoot me a DM. But it's going to be epic, guys. It's going to be epic. I hope you all have a fantastic weekend, and I'm sure I'll catch you soon. Peace out.